Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
Just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning. Good morning to everybody over on the West Coast. Good afternoon to those of you on the East Coast, and to those of you in the middle, welcome to your lunch hour. It's great to be with you today. I'm Jeremy Whaley, founder of Trade Maestro, and we're getting into our fourth consecutive day of doing this show, which is great. It's exciting. We've got some good feedback from some of you, and today we're going to be talking about what I refer to sometimes as the perfect trading strategy, the absolute perfect strategy. And it's going to be a little bit more advanced, but as we've talked through the trading blueprint over the last several days here, we've gone through all three of the major chunks, which is analysis, and then that second chunk is strategy, the third chunk is risk management. So today we're going to jump in and we're going to talk a little bit about strategy. And rather than do the really basic stuff, I'm going to do one that's a little bit more advanced, but I think it's going to give some of you guys some ideas and some optimism about what you can do even in crazy markets, when the market's going up, when the market's going down, all sorts of opportunities. So that's what we're going to be talking about today. But before we get there, of course, as always, let's go over and we will start our session with some market analysis. I don't know if Deepan's here today, but he reached out to me this morning and had some questions that I'm going to address. And by the way, that's always an opportunity for you guys. If you want to send me an email, or if you got my phone number, you want to send me a text message, and if you have a question that you'd like to get addressed, I'll try to do it in a way that everybody can benefit from it. So I'm going to do that today for Deepan, and that's always an opportunity for you guys if you're here on the live stream. All right, let's come over here to the market and see what's going on. I am going to have, hopefully by next week, a new display here where you can really see these quotes nice and big. But for today and for tomorrow, and maybe part of next week, you're still going to have to look at this little tiny, what do you call this thing over there? The little watch list. So right now, as we are live, the Dow Jones is up 217 points. The S&P is up 21, make that 20. And the NASDAQ's down. I said up, I meant down. Dow Jones is down 214. S&P is down 20. And the NASDAQ's down almost 35. So let's look at these. And in the process, I'll address Deepan's question. As you remember, throughout the week here, I've been laying out the case that we're in what we call a channel. It's a trading pattern or a chart pattern of consolidation, where basically the market is moving sideways between a support and resistance area in a bit of a predictable pattern, but it's not necessarily making bullish movements or bearish movements. Now, on a short-term basis, yes, it's going up and it's going down. But if you zoom out and you look at the big picture, there's not necessarily a trend at play. This is what we call a sideways trend. And when you're in a sideways market like this, our favorite tool, the moving average, we have to just turn it off, not pay attention to it. And the best tool in a market like this is going to be your stochastic. You will notice that your stochastic gets into absolutely perfect sync. I'll do another live stream just on Stokes one of these days, but it gets in perfect sync with the tops and bottoms of this channel, and it gives you absolutely fantastic buy and sell signals. And so the question that I got today from Deepan is, he said he wanted to know if it was the right time specifically on the NASDAQ to get in for a bearish trade. He wanted to buy some put options and trade in a bearish direction. And I told him not quite yet. And I'm going to explain to you guys why I told him that. As you're looking at this pattern, as I've already said, the primary suggestion is that the trade would rally over the next 2 to 4 weeks and meet us back up here at our previous resistance, which is around 45,000. Now, there's nothing that says it has to happen. Absolutely nothing says it has to happen or that it has to happen in that fashion, but that is what the pattern suggests, okay? So we always start with what the kind of obvious suggestion is, and we kind of build from there. Now we talk about what are some of the possible varieties. And as I said earlier this week, one of the possible varieties is that we would, since it was starting to slow down a little bit, we would test this support from the top side and then continue. And I do think that's what we're in the process of doing right now. I think we're in option number 2 right now. A third possibility is that none of this happens the way we thought it would, and it just drops back down. Maybe it matches this previous support, or maybe it comes on down to this next one that we've got with a big purple line right here. That would be your third possibility. And right now, as of today, it's your least probable direction. Now, I know if you're watching the news media, you're hearing about auto tariffs and you're hearing about all this crazy political stuff going on. And if you're watching the news, as I've often said, the news media, they don't really know what drives the market. So whenever they wake up in the morning and the market's down 200 points, they look around, they say, what's going on? Oh, it's the president. He's talking about tariffs. It must be his fault. You know, one of the greatest examples ever, I remember back when the Occupy Wall Street was happening. Some of you might be too young to remember that. But that was about, what, 10 years ago, 15 years ago when Obama was president. And there was people literally camping outside protesting Wall Street, dying in protest of capitalism, and the market just kept going higher and higher and higher. So if you wanted to connect the news event, obviously Occupy Wall Street did nothing to the price action of the market. News does not drive the market. What news tends to do is follow what the market's already doing. It is possible, sometimes what we have is a news event comes out and it accelerates what was already happening. But before that news event happens, there's already a direction happening in the market. And so what I'm trying to say about that is you can't just sit here and watch the news and say that's why the market's down today. It's not the case. Now, there's certain things like Fed announcements that will accelerate for sure, but we've already got this market basically set up. We already know what's happening. And the reason that it's not collapsing right now is because it's not in a cycle for collapse, in my opinion. Okay, so what I think is going to happen probably is we're going to maybe sell off a little bit more, test this pivot, or this may be all we get, honestly. We may be there. All you have to do is look back at a previous cycle here. This was the one from the end of the year where we hit the bottom, we bounced for about 3 or 4 days, and then we hit a new touch on that bottom, just slightly lower, and then the upward cycle came. It was still within that channel. Everything about that was in the channel. And so as you look at this current movement, it's most probable, I do believe, that we're going to test it right here and then continue to the upside. It is also possible that we would come down and match this support and then maybe bounce, or maybe we come on down to this support. But as of where we are right now, am I afraid of a big bear market? Am I willing to go buy a bunch of put options and take a big bearish trade? And the answer is no, I'm not. I'm not thinking in terms of big bearish trade right now, okay? At least not today. Now take a look over here at the S&P 500, and you're going to notice that it essentially looks the same. In fact, the selling that has happened today has sold off essentially to that support level. That is one more thing I wanted to bring up here. I don't need to look at it on the Dow, but it's basically doing the same thing. When you look at the S&P and you look at where we rallied to, and we talked about this yesterday, how we had an evening star candlestick formation. It sold off, but it didn't really sell off. All we're doing is getting stuck here between these different averages. So you're in a mini consolidation inside of the larger consolidation, and that's why I say it's actually not a good time to be shorting it. It's not a good time to be buying put options because we're just not in the cycle yet of an actual bear trend. Now, we're below the averages, and I can go on and on. You're looking at the NASDAQ right now. I can go on and on making a bearish argument if I felt like we were there, but sometimes, especially in consolidations, you just have to take in so many different data points and really interpret, are we actually at the point of bear market yet? So this is the one that Deepan asked me about. He wanted to know, should he be buying some puts today in anticipation of a bear trend? And what I'm going to tell him, if he's watching right now, and for those of you who are watching, is for the same reason I just said on the Dow and on the S&P. I'm actually not that bearish yet. You say, well, what would you like to see? Well, we are below the moving averages. That's one of the signals I want to see. The averages have crossed. The averages are red. All of that is moving in the right direction. But we're stuck right here around all this support levels. And we're actually fighting the stochastics just a little bit. Now, if it was a regular trend, I wouldn't put as much weight on the stochastics. But because we've been in a consolidation pattern, and because there's all sorts of movement that's sideways related as opposed to actual trend related, I put a lot more weight on the oscillators, such as the stochastic or the JMAC you see at the bottom here. I put a lot more weight into these indicators in a market like this than I do in a trending market. And so that's one of the things you're going to learn as we work through different indicators, we work through different principles. You're going to learn there's just different market conditions where different things apply. And for where we are today, I'm not quite ready to be bearish. Now, the next question is, what would it take? What would it take to actually be bearish? And the answer is, number one, I would definitely like to see a big red candle, even though I just drew it in green. I'd like to see a big bearish candle right here. And I'd like to see our stochastics making a turn down. And I think even in this case, because there has been so much sideways movement, I think I'd like to even see it drop below the most recent support. That's not a requirement necessarily, but it would help really confirm a little bit more that this is actually a bearish trend. So I'm very cautious right now, especially on the daily chart, especially on swing trades. Just simply because we've had so many whipsaws. I mean, we went basically the entire year. If you look up here at the top of the chart, we've spent the entire year and most of December just kind of getting beat back and forth as it's been moving sideways, very sideways. And that's frustrating. So, you know, the first idea that it might be breaking out and getting into a new trend, everybody's excited about it. But that's why I look at all three of these indices. When we step back and we see where we are on the Dow, it's a very defined channel. We can clearly see we're in a consolidation. The S&P, slight variation, but essentially the same pattern. And then you look at the NASDAQ and you say, you know what? I don't think we're actually trending yet. And so you've got to just kind of look beyond those moving averages in a situation like this. Look at what the structure is that we talked about the last couple of days with our framework and with our grid, or the matrix as I often call it. And just kind of interpret where we are in terms of market trends. So, Deepan, if you happen to be here, feel free to chat with me here. But that is the answer to your question. And for the rest of you, that is your market overview for today. All right, where shall we go from here? Well, again, if you got any questions, obviously type them in. We always want chat. That helps everybody. But if you don't have any questions, I'm going to jump right in. And I want to talk today, as I've already said, about our what I'm referred to as the perfect strategy. I want to talk about the perfect strategy. Before we do that, I want to remind you, I've been talking about this all week. Coming up next week, coming up on Monday, I'm going to start teaching the Pick Winning Stocks Challenge. I'm going to do this live one time. I normally offer this as a pre-recorded series. We offer it in our membership area. I'm going to do it live on this channel right here. We're going to start this coming Monday, March 31st. You have to be here in person. I'm not going to send out the recordings. If you want to go through the challenge with me, then you got to be here. That's what we're going to do for the next 21 days. And if you miss a day, then you miss a day. But, you know, do your best to be here so that you can participate and you can go through all this incredible training. And it really will change your life if you learn the stuff that we do in the challenge. All right, let's talk about the perfect strategy a little bit. And I want to show you a scenario. What you're looking on the screen is a chart pattern. This is a chart pattern known as a triangle. And we talked a little bit about patterns yesterday. We actually talked probably more than I should have about patterns yesterday, but this is one of those critical patterns that shows up from time to time. A lot of people, I would say the majority of people, whenever they talk about triangles, and really all patterns, but especially triangles, they do not give you accurate information. For the most part, when people see a triangle like this, most people will say it is bullish, that this trade is going to break to the upside. They would be wrong. From a statistical standpoint, this is what we call a descending triangle. It's descending because, as you can see, the bottom is flat and the top is descending. So that's a descending triangle. If the top was flat and the bottom was ascending, then it would be an ascending triangle. And if the both lines were coming in together, then it would be what we call a symmetrical triangle. A symmetrical triangle has a statistical breaking rate of almost exactly 50-50. Half the time it breaks bullish, half the time it breaks bearish. Descending and ascending triangles, there's a little bit of controversy about them. The fact that that top line is coming down shows that the trading sentiment is pushing the price action down. That's bearish. The fact that the bottom line is holding flat is showing that the support is holding strong, and that's bullish. So which one is this pattern? Is it more bullish or is it more bearish? Well, according to Thomas Bulkowski in his Encyclopedia of Chart Patterns, he would say that he himself, I think, would say that it's a bullish pattern, although his statistics do not actually bear that out. His statistics suggest it's fairly equal. My experience, this is just me, there's no science to back this up, but my experience with this pattern is I feel like it tends to break to the downside. I feel like it tends to break bearish more often than not. But it doesn't matter, because the one thing that all triangles have in common is when they come into this apex, when they come into that fine corner, they have to break one way or the other. That's the good news. So you don't really have to sit here and guess. And you don't have to sit here and say, well, is it going to break to the upside? Is it going to break to the downside? What are the odds? It actually doesn't matter. When we talk about those things, that's kind of the nerdy side of trading, but the simplistic side of trading is to just simply recognize, oh, I'm stuck in a pattern. And this pattern is going to break out. And if you know anything about triangles, then you know that when they break out, they tend to break out with a really big move, a lot of gusto. Okay? This happens to be Tesla, and I'll show you the end result here before we're done with the day. But the question is, do I want to trade it to the upside or do I want to trade it to the downside? And as I've already said, statistically, you don't know. So the question now becomes, remember the last 3 days I've talked about the trading blueprint for making profits. Step one is to do your analysis, identify the direction of the breakout or direction of the trade. Step two is to apply an appropriate strategy. What I just talked through on this trade is pieces of analysis. I didn't do a complete analysis. I just did enough to set the trade up. Okay? Yesterday and the day before, we spent all that time talking about analysis, right? So today I'm just giving you enough after you've done your analysis and you know it's going to break one way or the other. And if you know the pattern and you know it's got about a 50-50 chance of going up and about a 50-50 chance of going down, the question is, which way do I want to jump in? Do I want to buy the stock? Do I want to short the stock? Do I want to do something different? And that's where strategy comes in. Because the person who has a very narrow strategy in their approach would say, well, I'm going to guess, and I got a 50-50 shot of being right. Or the person who's very narrow in their strategy would say, well, statistically, it's just a crap shot. I'm just going to not do it. And yet, this trade setup is one of the most profitable trade setups that I could show you. So why would we walk away from a profitable trade setup simply because we don't know how to approach it? In the 3-step trading blueprint, step number 2, which is strategy, answers the question, once you've identified the direction, how do we play it? That's what step 2 of the blueprint addresses. Step 1 is identify the direction. Very briefly in this analysis, I've identified the direction, and I said that the direction is stuck. You say, well, that's not a direction. No, it is. It's a direction that it's stuck right now. It's not going anywhere, but we know that it's going to break out because of the pattern. It's one of the 3 steps of the 5 disciplines that we talked about yesterday is chart patterns. So this pattern is set up in a way that we know it has to break up or down. We just don't know which way. So rather than guess, the strategic answer is, can we do both? Why not do both? What if I could set myself up in a position that would make money if the trade went up and it would make money if the trade went down? You say, is that possible? Well, let me introduce you to a strategy that some have referred to as the perfect strategy. It's not perfect. There's no perfect strategy, but it's a pretty darn good one. And I want to introduce you, if you've never heard of it before, to a call option and to a put option. Now, options are a more aggressive form of trading, something that I'm very adept at and really love to work with and also love to teach. And one of the great benefits of trading options as part of your strategy is that it brings to the playbook an endless smorgasbord, if you will, of trade possibilities. So for those of you who are new to options, you don't know much about it, let me give you just kind of a high level introduction. And if you don't understand all of this, it's fine. You will understand it eventually. But for those of you who are brand new, here's the definition of an option. An option, a stock option, crypto option, any other kind of option. An option gives the buyer of the option the right, but not the obligation, to buy or sell a specific stock for a specific price on or before a specific date. Now, if that sounds nerdy, it's because it is. It's a definition. I mean, definitions always sound nerdy. But if you break it down a little bit, what is it? It's pretty straightforward. An option, that's the thing you're going to be trading, gives you the right, gives you the choice, gives you the option. You're not obligated, but it gives you the right to buy or to sell the stock for a specific price on or before a specific date. That's all it is. It's a contract that gives you the right to buy the stock or gives you the right to sell the stock. Now, there's two types of options. Number one is a call option, and a call option is the one that gives you the right to buy the stock. So if you buy a call option and the stock goes up, you have the right to buy it at a different price by a certain time period, and you can capitalize on that and make money with it. The flip side of that is what we call a put option, and a put option gives the buyer the right to sell the stock at a specific price on or before a specific date. Now, if you just kind of think through those definitions and you think through what those options would allow for you to do, if you were to look at the chart that we looked at a moment ago, let me see if I can run my screen back here, because I did kind of go through some different slides. I think I went a little too far. Now, hey, just a quick brief reminder, since I went too far, Pick Winning Stocks Challenge is going to start on Monday, March 31st. You want to be there. You have to be in person. I'm not sending out recordings. All right, back to my pattern. This is what I was looking for. So the question is, if we want to trade this, we say, why can't we do this in both directions? Well, if you bought a call option, let's say you had the right to buy this stock at $380 a share. If it goes up to $450 or $460 or $480, would you like the opportunity? Would you like the right to go back in time and buy it at a cheaper price? The answer is absolutely. $60, $80, $100 less? Yeah, absolutely. Or what if it broke to the downside and you had the right to go back and sell it at a higher price? Let's say this breaks to the downside and it's trading, a week or two or three from now, and it's $280 or $300 a share. Would you like the right to go back and short this thing at $380? Well, yeah, that sounds like a great idea. That's what these options allow us to do. The call option gives us the right to buy it at usually at a lower price, because nobody's going to pay more for it. So you're going to do it the way you're going to set it up is for a lower price. The put option gives us the right to go back and sell it at a higher price, which in a bear market is advantageous. And then when we synthesize these two together, we get this strategy that I'm going to introduce you to called a straddle. Now, what a straddle is with a straddle, we're going to buy both a call option and a put option. A call and a put, both at the same time. We're not taking a bet. We're not saying I'm going to be bullish or I'm going to be bearish. We're saying I'm going to do both. I don't know which way the trade's going to break out. I just know it's going to break out. And I'm going to position myself for both. We're going to do it by buying the same strike price. And now what we have is we have equal odds that the position is going to be a winner. Either the call option is going to make money or the put option is going to make money. They're not both going to make money, but one of them will. Now, you can't do this all the time. You could, but you'll lose a lot of money if you do it all the time. But on a situation like this trade setup right here, it makes sense to buy a 380 call and buy a 380 put. You say, why does that make sense? Well, we're in the apex of the triangle. It's going to break one way or the other. That is a characteristic of chart patterns. So that's the first thing. The second thing, and I can't really draw on the slide, it doesn't work very well, but you should be able to see my mouse here. When a triangle breaks, the first iteration, the first wave inside that triangle, we set up what we call a measured move, where this trade, when it breaks out, is going to move at a minimum of that range. Well, in this case, that's almost $100. So we've got a trade situation where it's coming to the apex of the triangle. It's going to break one way or the other. We just don't know which way. But we do know when it breaks, it's probably going to move about $100 one way or the other. Yeah, this is a great strategy, right? Because if it breaks to the upside, my 380 call is going to go up a lot in value because it gives me the right to buy at 380. Maybe we're trading at 460, 480, maybe 500. And if it breaks to the downside, then I have the right to go back and sell it at 380. And maybe that time we're trading at 300 or 280 or 260. This is called a straddle. And it's one of my favorite strategies. We use them in different circumstances. This is one of the situations. And what it does is it allows us to make profit on an explosive move if the trade is moving up or if the trade is moving down. If you understand anything about option risk profiles, here's what the risk profile of the straddle looks like. In order to reach maximum risk, the only way it's possible is for the stock at expiration to close exactly at 380. Now, statistically, what are the odds of that happening? The answer is not very much. So you're not going to lose everything on the trade. You know, it would just take closing exactly at $380 a share to lose everything. It's almost impossible. But if it goes higher, your call option is going to have money. And if it goes lower, your put option is going to have profit. So one way that the trade goes, there's at least equity in the trade. And of course, the faster it gets there, the faster you get equity. This top part of this graph, if you can see that, the blue line, that would be if we didn't wait till expiration. The bottom down here is if we waited all the way till expiration. But you know, if this was immediate, if it started to take off to the upside, you start to get profit. Takes off to the downside, you start to get profit. Either way that it moves. So again, as I said, this is called a straddle. It's one of the many strategies that I teach. I've got an entire course on it in our membership over at Trade Maestro. It's included there in the Maestro membership. But what I wanted to show you with this trade is I wanted to show you that once you've done the analysis and you have a direction, once you've done your analysis and you know probabilistically which way a trade is going, applying a strategy is literally just running a playbook. Once we have a situation, all we have to do is say, in this situation, this is the ideal type of a strategy for it. Would you like to see what happened with that trade? Thought this would be fun today. I'm not pushing the right buttons. There we go. I thought this would be fun to come down to the Tesla chart and look at what actually happened. Hopefully you can see this here. I'm going to go back and... So this has got everything on the chart, obviously. But I'm going to mark that triangle now in yellow. That was the trade setup that we were looking at. Do we want to go bullish? Do we want to go bearish? How many of you thought it was going to break to the upside? I mean, it's Tesla. It always goes up, right? Wrong. No, it doesn't. Contrary to what they like to say, it doesn't. You can see in here that we had multiple trades set up, the most recent of which was at 353. But earlier we had done the straddle on it back here. And you can see, I told you it would move this iteration right here, whatever that wave cycle is, which was about $100. On the breakout, which we'll say the breakout happened right in here. Well, we were dealing with 380 strike price. That's a little bit lower right there, but we'll say 380. When we finally hit support down here, 232. $232. What I love about this picture is it really shows everything we've talked about this week. It shows that there's a grid. It shows that, you know, once that pattern broke, it went to a logical spot. All over the news media last week, everybody's upset with Tesla for political reasons. All over the news media and social media, they're saying, oh, Tesla's done, it's crashing, it's collapsing. No. This is a regular market cycle. On day number 1 this week, I asked the question, why do people keep picking losing trades? That was the way we started this week with live streams. What is it that makes people choose losing trades? And we talk about hype, we talk about all these different things. And one of the things that we talked about is they don't have a perspective of what's really happening. So there's a lot of people about 2 or 3 months ago that were over here buying Tesla exactly at the wrong time. Great stock, wrong time. Talked about that on Monday. A lot of people were doing that. A lot of people, when it got into the triangle, didn't have a clue what was about to happen. And frankly, I didn't know if it was going to go up or if it was going to go down, which is why I did a training on straddles. And if you happen to have been following the YouTube channel for a while, you can actually go back. I did that, the stuff that I just taught you, I actually pushed that out as a video about a month ago. Before all this happened. It was setting up then. And then this is all that happened. And that's the whole point of the trading blueprint and what we're working through. And it's the whole point of what we're going to be getting into next week with the Pick Winning Stocks Challenge. When you learn to actually trade, when you stop listening to the news media, when you stop just following whoever's out there on social media, when you stop following the hype, and you learn to do the analysis, which is what we talked about yesterday, 5 disciplines of trade analysis. When you learn to do that, you can recognize these explosive opportunities. When we get out of the bias that a trade has to go up, we can participate in an explosive trade to the downside. Do you care if you make $100 a share while Tesla's going up versus while Tesla's going down? I don't care. I mean, look, if I'm going to make $100 or $150 a share, I don't care if the trade's going up or if it's going down. I had people all for the last 2 or 3 weeks saying, oh, what do you think of Tesla? It's terrible. It's terrible. I didn't think it was terrible. We had bearish trade setups on it. You can actually see the setups in here. First one we set up was way back here. This was the next entry we had. We've been updating this in all of our profit picks week by week. That's the evidence right there. Now, did it help that we have the moving averages and our red indication here saying to go down? Yeah, that helped. Was there other tools that helped? Yes. But the outcome is that we were prepared for the explosive move. And that's what I want to teach you to do. It's what I want to help you guys understand. Trading is not actually that hard. The hardest part of trading is to dissociate from all the voices that are telling you a bunch of BS. And to learn to trust yourself, to educate yourself, and then learn to trust yourself that you actually can choose the right direction of the trade. You say, well, how can I possibly do that? You're never going to guess it. You ready for this? I'm going to tell you. You start next week. On Monday, you come right here to the live stream and you join me for the Pick Winning Stocks Challenge. Normally, I charge for this. You guys all know that. I've said it many times. I'm going to do this live on the channel. We're going to go live for 21 days. Actually, it'll be like not quite 21 because we won't do it on Saturdays and Sundays. But it'll be a 21-day challenge, 3 weeks. And all you have to do is show up. We're going to start on Monday, the 31st. You have to be here in person, so mark your calendars. Show up, share it with your friends, share it with your family members. I'm not going to be sending recordings out. And what you're going to learn starting next week in the Pick Winning Stocks Challenge is I'm going to walk through the entire process over 3 weeks. Over the next 3 weeks, we're going to walk through the entire process. And if you'll learn how this process works, it will set you up so that you can really build a foundation of being a great trader. All right? All right, folks, I hope you got a lot out of that. If you got any questions, type them in right now into the chat. If you want to go deeper, obviously, visit us over at trademaestro.com, trademaestro.com. Get signed up for our mailing list over there if you haven't done so already. Of course, right here on the YouTube channel, or if you're on Facebook or wherever, if you have not done so, please like and subscribe. Like and subscribe. Turn those notifications on so you can get the notifications, because, I mean, what good is it to like and subscribe if you don't know when we're going out and doing stuff? So like and subscribe, turn on those notifications, and tomorrow we'll be back. And I think tomorrow we're going to probably talk a little bit about risk management. It makes the most sense to talk about that tomorrow. Although I might have a sleeper surprise. We'll decide overnight. And then tomorrow, when you show up live at 1 o'clock Eastern Time, noon Central, 11 o'clock if you're in the mountains, 10 o'clock if you're on the East Coast, West Coast. When you show up live for our noon meeting, you're going to find out what we're going to talk about, and that'll set us up for the weekend. So I don't see any questions coming in here, so I want to thank all of you for being here. I hope you've all gotten some value out of this. If you have any questions, please feel free to reach out to me over at trademaestro.com. You can send me an email, Jeremy at trademaestro.com, or help@trademaestro.com, either one. I will see those, and whenever I see them, I will be happy to respond to you. Or, of course, if you can just respond here in the chat area, I'll try to respond there as well. All right, until next time, I wish all of you the best. I hope you have a wonderful afternoon. Happy trading to all of you, and we'll see you tomorrow.